Hi, welcome to optionsforhomeowners.com. My name is Neno, and today we're going to be discussing how to do a loan modification the right way, and I'm going to teach you step by step on how to do it yourself. This way you can save thousands of dollars from hiring an attorney's office or other modification companies. First and foremost, what is a loan modification? Well, the loan modification process is initiated by the homeowner contacting the lender directly and requesting a loan modification. Now, the lender considers a few different things to be a loan modification. It could be either rolling in your past due payments into your current balance. It could be an interest rate reduction. It can be an adjustment in your monthly payments, whether up or down, depending on the modification program. It can be a principal reduction, or it could very well just be changing the term of your loans. Now, who qualifies for a loan modification? Well, there's different kinds of loan modification programs, but the most common one is the MHA, also referred to as the HAM program, which is Making Home Affordable or Home Affordable Modification Program. The guidelines to this eligibility is very simple. It's got to be your primary residence, owner-occupied, which means you have to be living in the home. It cannot be an investment property, vacant, or condemned. Also, your principal balance must be below $729,750, not including your past due payments. Now we're going to be taking a look at the hardship letter. The hardship letter is going to be a key role to helping get your loan modified, and also gives you a chance to express your point of view on how you ended up in the situation you're at today. Let's take a look at the most common hardships that the banks are accepting right now. We have loss of job or reduction in income, a death of the homeowner, spouse, or family member, severe illness of the homeowner or family member, divorce or separation, forced job relocation by employer, and side note, this most of the time is going to have to be 50 miles further than where you live. Adjustable rate reset or shock of the monthly payment increasing, increased expenses. Now we're going to quickly discuss writing your hardship letter and some key tips you want to make sure that are included in your letter that's going to help get your loan modification done quicker and give you the best possible chance of getting it approved. Let's go over the first key tip here, events. Events of your hardship is going to be very important because you need to explain to the lender how you got to where you are today in your hardship. But that's not all you need with the events, you need the dates. The bank's going to be looking for dates of when these events occurred. They don't know if it happened 4 years ago, recently, before, or after your default. This is another key factor, making sure you have a well-written hardship letter, so there's no reason for the bank to deny you based on just your hardship. You want to make sure when you're writing your hardship letter, the bank, when they're reading it through your eyes. You need to make sure they understand your situation, because this is going to be your unique chance to explain to the bank what's going on with your situation. One more thing to point out that you cannot do without. Be polite. The bank does not have to modify your loan. You're asking them for a favor. As oddly as that sounds, that's the fact. And if you need any more help with this, feel free to contact us. We're here 7 days a week. Let's go over the full picture of the financial income and expense worksheet. Let me show this example I have up here. We're going to have monthly income and monthly expenses. Now for monthly income, we're going to use this example. We have Joe's construction. He's self-employed. He grosses about $4,000 a month. Net after taxes, $3,320. Jane, she's a W-2. She grosses $2,000 a month. Net after taxes, $1,500. We want to total them all down. For gross for this household, we're looking at $6,000 a month, and net is $4,820. This household, keep in mind, has 4 members, and I'll show you why that's important. Coming over to the monthly expenses, you have your first mortgage. In this example, based on a $417,000 principal balance, is about $2,200 a month on an interest-only loan. Second mortgage payment, $475. Property taxes, $300 a month. Homeowners insurance, $75. In this case, there is no homeowners association. Food, about $500. And the reason why I mentioned the family members are important is because most of the lenders, they're looking between $100 to $150 per member in the household for food expense. So as awkward that may sound, I don't want you to mess up your financials for putting too much in food and then the lender's cutting it back at the end. Fuel, we're estimating $350 a month. Utilities for electric, gas, water, air, $275 a month. Auto, say you have 2 car payments, 1 car payment, estimate $850 a month. Your situation's unique. Credit card bills, person must be doing pretty good, $250 a month. Other expenses such as clothing, any union dues, food, school and work lunches, estimate about $200 a month for miscellaneous. So total expenses we have here in this scenario is $54.75. We have a total net income of $48.20. So what you want to look at, take your total net income minus the total household expenses with your mortgage, everything's in there. You're looking at a negative $655 a month, which is why you're requesting a modification. Okay, so let's go back over here. And you see here, 31% on this HAMP program of your $6,000 a month gross income is $1,860. Basically, if a lender can go down this low, this is the lowest they're gonna go. However, just so you know, they can go a little higher if necessary if they cannot reach a 31%. They can go 33%, 34%, just depending on your investor and your lender and what their criteria is. Going back to this side over here, we have a $417,000 balance. Say your past due payments, you haven't paid for a year, $33,000 a month past due, with any attorney fees, foreclosure fees. So your total past due and balance is $450,000. So now you know, when they're gonna modify your loan, or looking into modifying your loan, they're gonna base it on your total balance and past due payments. In this example, $450,000. They know the lowest rate even possible, if they choose to go that low, is 2%. This is the floor rate. At a 360-month term on a new loan, your principal interest payment, which they have to be principal interest now. This was an interest-only loan. They have to go principal interest on any loan now with this program. And that's gonna be $1,663 a month. Plus your taxes and insurance, right here, $375, those aren't changing. Those may have not been impounded before, where you may have not been paying the lender, but now they're gonna require you to pay in your mortgage payment. And this is gonna be consisting of your total debt-to-income ratio. They're gonna have to include your taxes, insurance, principal, and interest. So over here, we're looking at a $2,038 a month total. Okay, coming back over here, your current mortgage, $22, property tax, $300, homeowners insurance, $75, no HOA. You have $25.75 for these debts, minus what the lowest possible payment can be, $2,038. You're saving $537 a month if they can offer you a 2% rate. What you do with this $537, you go back down to your negative $655. You know your total savings with the new mortgage payment, the best it can be, is saving you $537. You're going to go ahead and include that with your current debt, and you'll see the difference here. You're still going to end up negative the bottom line, $118. So, bottom line is, even if the interest rate makes sense to where it'll be within your debt ratios, you know, whether these numbers are matching up, even if this rate was doable, if it's not going to leave you positive at the end of the month, the bank's not going to do it. They're not going to take you from one bad situation into another bad situation. So, you know, it could be a little complex the way it looks. Overall, it's pretty easy. If you feel you have any questions, don't quite understand it, need a free consultation, feel free to contact us. We'll be happy to help you anytime. Thank you. Now that you have all your documentation at hand, the next step to do is contact your bank. You want to request for modification assistance. You need to be sure you're the one initiating the call with the bank, because the bank may not contact you until you're many months down. The bank's going to ask you a few questions on the phone. They're going to ask you, what's your hardship? Why'd you fall behind? Why do you think you're going to fall behind? This is a good reason to have your documentation in front of you to properly explain this to the bank. They're also going to ask you your financial information. Call it verbal financials because it's done over the phone. They don't see your documents yet. And they're going to go over the questions on your expenses, and you're going to give them those figures, and they're going to go ahead and record that into their system. So be sure it's going to match what you're going to have on paper. The next step is submitting documents. Now, the bank's going to send you a package with a return envelope for your paperwork that they're requesting, which is the same list we went over before, or they're going to ask you to fax it in. They'll give you that fax number. Be sure to promptly send it in because first come, first serve. The line's long. You want to take care of it ahead of time. Once a week follow-up. It's recommended at least one time a week you want to follow up with the bank. It's one of the biggest problems with attorney offices, other modification companies. They're not following up on your loan often enough, which causes it to fall out of review. There you are, process starting all over again, new information needed. Minimum 1 time a week recommended. If it has to be once every 2 weeks, because you're already assigned to a negotiator, you know it's going to be a while, they have everything they needed, once every 2 weeks is fine too. Let me go ahead and show you a couple of the questions you should be asking the bank when you call in. You always want to ask the bank if there's any additional paperwork that's needed. Sometimes your package is not complete. They may find more documents they need after your initial review of the paperwork you sent in. You always want to make sure, do they have everything they need? Do they need anything updated so you can send it in? Is it assigned to a negotiator? The answer to this from the bank can show you if the process of your modification is going further into review or standing still. Most of the common answers you're going to get is still in review, no updates yet. Still in review, no updates yet. However, if it is assigned to a negotiator, they'll let you know it's assigned to a negotiator, which means you know it's gone through most of the process and then you're on the tail end of it here. You'll want to ask, if you're above 5 months behind, you'll want to ask, is there a notice of trustee sale? The reason why you want to ask this is you want to stay on top of any sale dates that may be coming up on your home. I recommend at least 5 months out. You can start asking sooner, but no later than this because you may not catch that sale date and you're liable for requesting for postponements on your own sale. You want to make sure everything's updated and review so they're able to postpone that sale date. Majority of the time, they will, but it's not guaranteed. Investor reviewed. This is past the negotiator stage. Basically what happens is the negotiator puts the paperwork together, puts a proposal together on what they can or can't do, submits it to your investor, who's the underlying note holder. It's basically the person who owns your home. And they go ahead and give the negotiator an answer if you can or can't do the loan modification. So this is the final stage of your loan modification. You'll know how far you are. Able to keep making payments on your mortgage? This is something you definitely should ask the bank. Sometimes the bank doesn't allow you to because of the foreclosure process you're in. You may be too far down where they may not be accepting payments. I recommend continue making payments as long as they're accepting them to the extent possible. It's very important you're showing interest and showing your investor that your commitment to keeping the home, you're not just letting the home go, you're not making payments, you're showing commitment, you want to stay in the home. Now, this is our toll-free number, 800-440-3351. Please feel free to call us anytime. We're here for free consultations. We know it's a stressful process. We've been through a lot of these cases, and we're here to help you out. And thank you very much for contacting us, and we'll speak to you soon.